I am here. Thank you, Josh. I will take it from here then. So, just a quick poll. How many people have seen this type of screen before in their trading career? Now, the most I've gotten ever is 98. Just, I'm sure they're guessing, but have you ever seen this screen before that if you trade, you can risk and lose all your money and all that kind of stuff? So, you've probably seen this before. And most people get sick and tired of seeing it, but good old SEC makes us do it. So just be aware of you can lose money, trade in simulation, all that type of stuff. All right, thank you, JB. Well, fantastic. So I'm going to do a little bit different types of presentation today because I'm going to cover two things. And one thing is I'm going to give you a trade you can take away from today that you can start testing, start working on, and start trading, because Cyber Trading University has fantastic trades out there. They work, and this is just an auxiliary. When there's times when you want to trade and maybe your setup's not happening, you can take a look at some of the trades that I'm doing and maybe take a look at them to see if they're more towards what you want. So I'm going to give you a really good trade and made money today. It's done very, very well for us, and I think you'll really enjoy it. And then before that, though, I want to get into just some things that traders, the mistakes they make, because before I get started, I got a question for you. Why aren't you making more money day trading? And you're probably making one of these 7 mistakes. And it's important that if you are making one of these mistakes is to recognize it right away so you can start changing things. And the first mistake people make is they trade all day long. Some people trade, and this is Eastern Standard Time, from 8 in the morning till 6 at night. That's a long day. You've got to think about trading, and trading in general is similar to that as you're a conditioned athlete. Are you really good 6-8 hours a day? No, you're probably good maybe 1 or 2. So for your own personality, step back and figure out, when are you best at the day? Are you better in the morning? So you better in the afternoon? Figure that out, because to trade, you really got to stay focused. Got to shut your phone off. You got to shut off the distractions. Pick 1 or 2 hours out of the day that you really want to focus on your trading and make that your mainstay. You'll find yourself doing much better, and you won't be so exhausted at the end of the day. Hey, trading's work. It really is. At the end of the day, it's even after trading 2 or 3 hours, you feel tired. You're concentrated, you're focused, and it can be very exhausting. So pick a 1 or 2 hour time frame that works best for you. 2 is they're capitalized, and this is huge because I run into this too many times with people. Here's what I don't like to see. I don't want people say, "Yeah, I've got my mortgage payment, or I've got my car payment, and that's the capital I'm trading." You really can't do that, because it's going to put you under stress, and you're not going to trade the way that you really want to trade. So what we recommend, and I'm sure they do also at Cyber Trading University, is start out in simulation and get really, really good in simulation. Backtest. And I don't know what software packages you guys use, but there's many out there that will allow you to do what's called market replay. So you can practice your trade 20, 40, 80, 100, 200, 300, 400 times before you actually go live. And then one thing that we've just recently gotten into is, it's actually been a couple years, but I think it's recent because they didn't have it when I first started. And that's, think about trading with a prop firm. A prop firm is a company that lets you give you money to trade with, so you're not risking your own capital. So if your system's working and it's working well, think about taking a test with one of the prop firms out there, and if you pass the test, they'll fund you up to $150,000. Something to think about. And that will get rid of that undercapitalized problem. 3 is they learn a new system and they start trading real money right away. It's the worst thing you can do. I know you're excited. I'm sure you're learning a lot of great things at Cyber Trader University, and you just can't wait to get started. And I hear this all the time. Well, I got to make money now. I don't have time 3-6 months from now to start making money. I got to pay bills now. It's the wrong type of thinking to have. You're learning a new craft. You're learning a new way of making money. And it takes practice. It takes experience. And it doesn't happen overnight. You've got to practice, practice, practice. So slow down. Start learning your craft. And don't get too excited to start trading right away. It will come. It'll come over time. But don't get too excited and slow down before you start trading real money. 4 is they trade with the wrong tools. Now, I'm not going to bash any tool out there. I'm going to say that you can trade with any platform you want, but make sure you use a platform that's specific to your type of trading. If you're trading stocks or if you're trading options, you use a different platform. Brokers are specialists too. So a lot of people say, well, what brokers do I like? Well, if you're going to trade options, Thinkorswim's a great brokerage, one of many. But if you're trading futures and you're trading stocks, they're too slow. So find the right type of broker that trades with the type of stuff you're trying to do. Now, if you want to do mutual funds and do the big boy stuff, yeah, go with Fidelity and go with the bigger firms. But make sure you use a day trading firm. And I'm sure at Cyber Trading University, you're doing a lot of day trading. Find a day trading company. And there's a lot of out there. And if you're trading futures, use a futures broker. Make sure you use a broker that is a specialist to what you're actually doing. Excuse me. Rooster says the faster the time frame, the more exhausting it is. Actually, that brings up another question, Rooster. It's not actually. That just should be a telltale sign for you. And I'll get into that in just a second. Now, I like to use indicators that are not subjective but are more objective. Yeah, that's true, Wayne. The more you lose, the more exhausting it is. No question about it. Now, I'm not here to bash any indicator. I'm not going to tell you that any indicator is the wrong way to use it. But and again, I don't know what you guys use, but a lot of people use the stochastics, the RSI, and that type of indicator. What I find out is they're using these improperly. And these are more trend-setting indicators, such as stochastics, RSI, MACD, moving averages. Now, I use some of these certain parts of the day, but for entries, I try to use more futuristic setups, such as CCI, Fibonacci's, trend lines. See, the ones on the right, they actually tell you where the trade is. The ones on the left tell you trend and when. So one of the biggest problems I see out there is people throwing all these indicators on their charts, and they really don't know what the purpose of those are and how to use them properly. So if you're one of those people, and I was one of them, and this is why it's on my list, is because I literally had 15 indicators on my chart at one time. And I got 4 up green arrows, 3 down arrows, and you just don't know what to do because you got all these things pointing in all these different directions. So if you're using lagging indicators, use those as trend definitions for you, and then add on indicators such as leading indicators such as CCI, Fibonacci, trend lines. There's a good list of leading indicators out there to tell you where you're getting in. Can a moving average be leading if you use it for support and resistance when it comes back to price? I would tell you, Rooster, it can be, but you also need some other type of confluence to do that. And I don't have time to get into that today. But moving average can work like that, but with a moving average by itself needs confluence with some other indicator. Otherwise, if you do the back testing and the statistics on it, it's a losing game, and I've seen it over and over and over. Now, if you get to read price action and if you can read a couple other things, that will help you out quite a bit. Okay, next is they don't know their trading time frame, and I think Rooster, this gets into what you're looking at is if you're trading, 50 times in an hour, and you just feel exhausted and overwhelmed, and you're losing too much, you're probably in the wrong time frame. So if you get into a trade and you're feeling uneasy in such a way where, I'm not filled yet, or, worth profit, you're probably in a too slow of a time frame. So you've got to mix the time frame to your personality. And this is the funniest thing I see, because I see so many good systems out there, such as the ones they have at Trading University. And you know what? The systems are great, but that actual entry or that actual trade may not be perfect for that individual's personal time frame. So we all think differently. We all think at different speeds. And I would just challenge you to find the trade that works best for your thinking. Maybe you should be in a trade for 2 hours because that's your personality. Maybe you should be in a trade for 10 seconds. So you got to find that. It may not be the system. It may just be your personal preference and your personal time frame. And here's a big one: poor risk reward ratio. This blows out a lot of traders because you got a lot of scalpers, a lot of quick people want to take quick profits. But let me tell you something: if you're going to make money in this business, if you risk $1, you got to make $1 minimum. In fact, I tell people if you're going to risk $1, you really need to make 4. So make sure that the system you're trading has that type of risk reward ratio. It's really important, because if you're taking too quick profits and your losers are bigger than your winners, you got to have a 98% winning system. And not many people have the psychology to actually trade that type of system. It's very, very challenging. So one thing to check: risk reward ratio, because when it comes to trading, it's all about risk. That's all you do. If people ask you what you really do all day long, your answer should be, I manage risk. That's what I do. I manage risk. And the best traders out there, they're really good risk managers. Okay, so these are 7 common mistakes, and that's probably why you're placing more losing trades than winners, repeatedly giving away your hard-earned profits, and blaming the market or yourself, and not whatever approach you've been using. And you may be looking for, a better system out there. So I'm going to introduce you to the opening price trade. And I get a lot of great feedback on this trade because it wins. It wins a lot. But more importantly is I'm going to actually show you one extra nuance that's going to help you with these trades. So I'll first show you the trade in an abstract form, and then I'll apply some charts so that you can see what we did today or this week. So here's what we're doing. Now, on this trade, you can trade a lot of different things. You can trade indexes such as the NQ, which I'm going to show you today. You can trade TF. You can trade the S&P 500. You can trade oil. I mean, there's just a plethora of things that you can trade. The YM. You can trade stocks with this. So there's a lot of different things you can do. So it's just not limited to the NQ, which I'm going to show you today. I'm just using the NQ because it's been working well, and it's been a very simple trade to do that's very consistent. So I'm all about time trades. I like taking trades that happen at very specific times of the day. With a lot of my trades happen within a 3 to 5 minute window. Sometimes it might take 10 to 15 minutes, but I'm not one of these traders who can just sit around, 4 or 5 hours in the day and just wait for a setup. That's just not me. That's not how I'm wired. See, I'm an on-time freak. I'm always on time, and I kind of like my trades to be the same way. Which, when you think about it, the trading day is short, and you only have so much time you can devote to what you're doing. And I like to make the most of my time. So this is just some ideas of what you can trade with. Now, the chart I use is simply just a 1-minute chart. And you'll look at my chart and you'll say, oh my gosh, that is such a simplistic chart. Absolutely. Real easy. Nothing. You don't need a NASA computer to trade the way I trade. So I have a 1-minute chart, and you'll always see me draw this black or blue vertical line. And what this line represents is 9:30 a.m. Eastern Standard Time, which is the open of the New York Stock Exchange. And you'll also see on my screen at the open this dotted green line. Okay, and this dotted green line represents opening price. That's the open. So, and real quickly, there are 7 distinct phases that occur between 9:30 a.m. and 10 a.m. Eastern Standard Time. And I'm gonna talk about one of them today. But generally, the market, when it opens up, loves to move in one direction or the other. And each one of these lines I'm drawing is a 1-minute price bar. Do you have a financial goal, and are you done each day or quit after X amount of time? I look at it as, here's my trade, here's how much I'm willing to risk, here's how much I'm willing to make. And the financial goal is done per trade. And each trade, I'm trying to make anywhere from $200 to $300, risking anywhere from $150 is what I try to do. So the market will open up and it will trend in one direction or the other most days. You'll either trend up or it'll trend down. Yes, there are some days where it will just trend sideways, and you're going to have those days. Those sideways trending days, I don't take this trade right away. And the way I define a sideways trending day is if the first price bar, if this is the high and this is the low, if price is still trading within the high of the first price bar and the low, I step aside. There's just no volatility. Also on the NQ, the first minute that goes by, I need to see 1,800 contracts go through. If I don't see 1,800 contracts go through, guess what? There's not enough volume. There's not enough players out there. I don't want to get involved. Okay, so most mornings, the market will start trading in one direction. After that, a lot of days, a high percentage of the days, price will actually come back to opening price. And the way you got to look at it is you got to look at it just like when price moves in one direction and is below opening price, it's almost as if the market put up a big brick wall. And this brick wall represents resistance. And they're going to make sure that they keep price down if they can. So when price decides to come right back up, it generally will bounce off opening price. And what happens? What happens when you have a big wrecking ball smack a wall? Well, what does it do? It knocks the wall down, but it also makes price bounce back, right? Just like a ball would bounce back. But the funny thing is once it hits the wall and the wall's gone, guess what? There's nothing in the way to stop price from going any higher. So what we'll do is we'll set a buy order, and we'll put a buy order in right about here, 1 tick above opening price, or 1 tick above where this penetrated through opening price. Now, yes, sometimes, you know what, it comes up to opening price and it goes over by a couple ticks, or it misses it by a tick. That's going to happen. So, but it'll come near or at or over just by a little bit opening price and come right back down. Well, then we'll place a buy order right on the other side of opening price. And after it touches and pulls back, then we'll get in on the other side of opening price and watch that thing take off to the upside. Now, what's the first thing you should think of when you get into a trade? It's all about money management, right? So here's what we'll do. Now that price is on the other side of opening price, what's been put up? Nice big brick wall, right? Good, because I'm long. I want that brick wall to hold and be support for my trade. So my stop is right here on the other side, 1 or 2 ticks below. This is my stop. And a lot of times, depending upon what I'm trading, my stop is anywhere from 4 maybe to 6 ticks. Because I can now get into a trade and I'll get into the trade and I'll move my stop just on the other side of opening price. So I have very, very limited risk. But I'm on the other side of support now. And one thing I forgot to mention is the most important price on a chart is opening price. Opening price is the most important price on your chart. How do I know that? Because I've talked to quite a few people who write all the algorithms for the big firms. I talked to the market makers. I talked to the people who've been on the floor for 20, 30, 40 years. Great question, right? What's the most important price on your chart? Opening price. Now, people will say, well, it depends where you're getting in and all that kind of stuff. And guess what? Trading is an auction. It's an open auction market. And that's where the auction started. And that number is used in their numbers to determine where their pivot points are, how their indicators are going to work. It's really a basis for everything they're doing. So opening price, very, very important price on your chart. So now we can take this thing up higher. Now, I like to have 3 different targets on my price. And my 3 targets are the following. My first target out there is going to be 8 ticks. Remember the 1-to-1 ratio? It's not hard to get 8 ticks on the NQ. Not hard at all. My second target is 16. And then my third is the most recent high on the 30-minute chart. To this third contract, I'm going for a home run. I'm going for a winner. These first 2 trades, the first one eliminates my risk or reduces it to hardly anything. It happens to do with the money management aspect. The second one puts money in my pocket. And the third one allows you to have those big winner days. So your risk-reward ratio is 1-to-1, 1-to-4, 1-to-20. And as price moves up, when my first target gets hit, guess what? My stop moves right up to break even. So we're all about reducing risk. So that's basically the trade in a nutshell. Same thing happens to the downside, and it's just the same in reverse. But here's the secret of this trade, which makes it work. And I'm going to repeat this real quick because how many times do you get into a trade and all of a sudden you get in, and let's say you get into a long trade. How many times does this happen? You get into, I'll put it right through there. You get into a trade. Let's just say for fun you get in here. And then you get into the trade and it comes down, and what happens? You get whipped out, you get stopped out, right? And it comes right back up to your area, and guess what? Takes off. How many times has that happened to you? How many times have you seen that happen? All day long. Here's the secret. The first attempt at a level is generally a fake out. The second attempt is the real move. That's a helpful indicator, Rooster. That's a very helpful indicator. So the second attempt is really where things are at. The first time, sucker trade. All-time sucker trade. All right, so let's go ahead and I will show you a real chart. And let's not talk about what happened last week. Let's see, do I get the right chart up there? I might not. No, let me bring the right chart up. Oh, there it is. You know, 1 minute chart. Okay, so let's review what type of chart we have, and you're probably saying, wow, what a complex chart that is. I've never seen one chart with so much stuff on it. Yeah, actually, it's not about how complex your chart is. It's about simplification. Okay, so I'm going to zoom in. Let's see, is this today? No, that isn't today. I want to bring up today's chart. Let's not talk about what happened 3 years ago. I want to find out what happened today. I always try to use recent examples. There we go. Okay, so let me walk you through the chart, tell you what you're seeing. Okay, so this blue line represents what? It represents opening price, right? There it is. That's opening price. Or, I'm sorry, it represents 9:30 a.m. Eastern Standard Time. Now you're going to say, John, 8:30 is on your chart. Well, that's because I live in the Central Standard Time Zone. Next is we have the open, and put that right on the open. There we go. That's the open. Oh, that's the open right there. Okay. So, let's talk about the open. What does price do? Actually, it's right there. So what happened today? Price opened up right there. What does it generally like to do the first few minutes of the day? It likes to trend in one direction or the other, right? So what took place? Well, price went in one direction, went up. Now you see how it came right to opening price, stopped, reversed, and came down. Guess what? There's your trade. It went up. Stops on the other side of opening price. There it took off. I do not live in Chicago. Beautiful city, though. Got a lot of friends in Chicago, though. I love visiting that area. So I'm trading price action, but here's what it loves to do. And here's the difference between just reading a book or taking a trade or people talking about stuff. But you see how opening price is a very special area? See how it came up? And when it came to this area, it was resistance, right? Shot back down and then went up. Watch that day in, day out, time after time. Now, what happened? Now, this is a trade you can actually take all day long. Look at this. Price came down, right? Came down to opening price. When price was up in this area, what's up? What happened? Brick wall, right? I like to use the brick wall idea because it makes sense to a lot of people. It's the brick wall. When price came down to this brick wall, it got smashed down the brick wall. It bounced, right? It loves to bounce and whip people up, and look, drop. Now that was today. I always like to talk about today's happening. It happens all the time on the NQ. Now there's gonna be days where, you know what, the market just takes off and it's gone. It's gone. When you're in a strong trending market, there's some days where it just takes off. But who knows the answers to this question? If you're in an uptrending market, how will the market generally, and I don't like to use absolutes, but how will the market generally open in the first 15 minutes of the day? Does anybody know that? I'll give you guys just a second to chime in. I wish I had a free giveaway today. A lot of times I have giveaways to people because I like to get a little more interaction today. But in an uptrending market, generally the market likes to move down the first 15 minutes. Yeah, there you go, Leda. Yeah, it likes to go down. Oh, there's a little bit of a time delay with Omnovia. Okay, I think I see that. Yep, there is a time delay. Yeah, the market. If you're in an uptrending market, Actually, you know what? I got a few extra minutes. Let me show you something. What's the general market right now? What type of market are we in? And again, you're going to say, well, what's your time frame? That's a great question. Well, the last few days on the NQ, all the big indices, they've been moving down, right? Right? They've been moving down. Did you guys know that 15 minutes into the trading day, the market will generally reverse? It will stop what it's doing and reverse. Pretty much close to 15 minutes in the trading day. Now, today it happened a little bit later, but look. Do you see? Oh, wrong button. Do you see how today the market went up? And this actually happened around a 9:47. See how it peaked and then it dropped. See that? If you're in a downtrending market, the first 15 minutes of the day, the market should move up. 15 minutes into the day, it should reverse and come right back down and continue on its downtrend for the rest of the day. Now, today, we hit a larger level of support on a larger time frame, and the market just took off. So it did bounce off a major level, and I'll zoom out to a 5-minute chart and show you what I'm talking about. But we had see, look, we hit major support on the overall indices, and we did come down, and they stepped in at the support level, and they rode it up most of the day. But just something to think about. Do you ever get into a trade or you're in a trade and in your 15 minutes in the trading day and you're like, oh man, they're killing me. It's hurting me. Step back. It's a game they like to play. 15 minutes into the trading day, they just reverse it. And you can see it happen all day long. It's funny. Once you know about it, you're in on it. So take a look at your stocks, your Russell, your S&P 500, and that type of stuff. And you'll see that 15 minutes in the trading day, they love to reverse it. And the way I learned that one real quick, I'll give you the quick story on it. I was on the floor. I wasn't trading. I was just being shown around. And the guy who I was with was buddies with a lot of people on the floor. And the guys, the men and ladies on the floor of the exchange who trade real money, they're not going to give you their secrets. They're just not going to. So what you try to do is you try to get some intel, but you try to ask questions that are a lot less probing, but more so beneficiary to everything. And what I noticed on the floor that day is 15 minutes into the trading day. Do you put horizontal lines like Globex high and low? Oh, absolutely. Globex high and low is very important. Very important. Very important, Rooster. Very important. I can't tell you how important. Let's just say they're important. But anyway, get back to my story. It was funny because around, and I don't remember this exactly, but after 10 or so minutes in the trading day, I kind of saw all the big market makers looking at each other, eyeing each other, like, okay, you guys ready? You guys ready? You guys ready? And they all came in and just took the market in the other direction. And I saw this happen, and I asked the guy, I go, what was happening there? I mean, you guys are all giving each other signals that something's going on. He goes, oh, yeah, that's a game we play every day. 15 minutes of the trading day, we just take it the other direction. And the funny thing is if all these guys trade with 5-minute charts, okay, there aren't hardly any charts on the floor, but you will see a 5-minute chart in the trading pits on the S&P 500. And so they just take the reversal on that 3 bars on the 5-minute chart. I thought it was really, really interesting. So now that you're in on it, now you can start making some money with that because, hey, 15 minutes of the trading day, they're going to take it the other direction. It's just a characteristic of what's going on. Oh, yeah, that's a time trade, isn't it? I like to trade by time. It's really important because that's just the way I like to think. I like when the market's on time. Yeah, that is good support. That's good support, Rooster. So anyway, should we look at another day? Let's just go back and look at another day. Let's do it this week, not 3 weeks from now. No, TJ, look at stocks. Look at anything that trades on the New York Stock Exchange, the NASDAQ, that has over a million contracts a day. I mean, you'll just see it time in, time after. It's a game they just love to play. All right, didn't happen that day. Let's take a look. All right. All right, here we go. Okay, here's an example. Some days they're just going to blast right through, and that's just the way it is, okay? And you're going to miss those days. You see how this day, see how they just blasted through? Didn't happen at all. You're going to have those days. It's just sometimes things are so strong. But the funny thing is because of news, because of openings of exchanges, because of a lot of algorithms out there, things happen at specific times of day. It's just what it is. And you got to realize that. And I don't care what system you're trading, you got to stay away from landmines. And there's certain landmines out there that will cause you a lot of problems, and that's time of day. Does anybody know what's happening next Wednesday at 2:00? I should have about 1,000 people chime in right now and tell me what's happening. If you don't know what's happening next Wednesday at 2:00 Eastern Standard Time, then yeah, okay, there we go. Exactly. FOMC rate hike. You better be on your game that day. You better be on your game. And that time will, I don't care what your system is, it's going to rocket. Go short. No, they're going to bring it up first for the first 5 minutes, and then they'll bring it down. They got to whip everyone out first, right? Okay, so this day it just took off. Strong market up. Hey guys and gals, before they can bring it down, they got to bring it up, right? You know the games they play. I know I got a lot of seasoned traders here. They got to whipsaw you. Exactly. They got to fake everyone out, and you're in good shape. Okay, here we go. 8:30. All right, here's a good example. So here's what we got. We've got opening price. Now this is a little bit smaller fake, but just want to make sure you understand it. Okay, so you see how in this example, I don't know if this is a great example, but see how price came up and then it came here and it bounced. Now, let me show you the bounce a little bit more because it's going to be hard for you to see this unless someone points it out to you. Now, I told you that, and I remember taking this trade in my trading room. So look, let me walk you through. Now, listen to this nuance very, very carefully. On a 1 minute chart, I could probably take about 15 trades a day. I generally take it between 2 and 5. That's just because of my personality. But look, you see how price came down? It went, and again, this is opening price right here. See that? But when it came down, this was the low right there. Does everyone see that on the price bar? I'll try to blow it up a little bit more. Let's make it real big. Yeah, this is better. Okay, now watch. See when they brought this, okay, here's what, but do you see how when price came up, it came down, it shot through opening price? Do you see that? And right here was the low. So when that thing pulled back, your short was actually right here, and then there's your drop. Okay, 5 points. Okay, see that? To the untrained eye, and if you haven't traded this, it's easily missed. Okay, you see that? There's your short. all based on price action. Does that make sense? That's a trade we took in our trading room. Now, guess what happened? Let's see. A little bit late, but about 8:50 in the morning, 9:50 a.m. Eastern Standard Time. Price stopped, went right back up and reversed. Please pay attention to the 15-minute reversal. It happens all the time. And one thing you want to pay attention to also, just a little nuance, is the volume spike. Gotta look at volume spikes. It's exhaustion. Very, very, very important to have on your chart. Oh, see, the CL, you know the funny thing is about the CL though? CL doesn't do that. The CL does not like to do that. Do you know what the CL loves to do? 10 to 18 minutes into basically every day of the week. You know what it does, TJ? Just curious if you know this. Here's a character, all you oil traders out there. I would not be trading between 8:10 and 8:15 Central Standard Time when oil opens up. You have any idea what happens, TJ? Here's what oil does. Oil tends to go into chop, and it doesn't trend at all. It just goes sideways. See that? Every single day, it seems like that's what oil does. Sideways move. Who would have thunk? How many of you guys knew that one? You got to know the characteristics of what you trade, because they're like kids. They have their own personalities, and they're all different. Learn to understand the patterns and the characteristics of what you trade. Now, Rooster, now you're on to something. Yeah, Andrew, now you're on to something. Exactly. Yeah. Why not? Learn the characteristics of what you trade. It's really important. So hopefully you've gotten a good flavor of what I like to do. And I want to tell you about my 1K a week course, because you don't need a lot of money to trade it. You can take small risks. What does it cost? $5 a contract to trade the NQ? But I'll show you how to take these trades, making $200 to $300 a day. Now, I only trade 30 to 45 minutes in the morning. That's it. That's all you need. And a lot of the trades I make are between $200 and $300 in the first 30 minutes of the trading day. And these are some of my best trades. And these are trades I actually do live in my trading room. So I'm going to actually show you how the market moves in the first 30 minutes of the trading day. The first 30 minutes of the trading day is just like a dance. They do the same thing every time, day in, day out. It's predictable. So in my course, here's what you get. And I'm going to go through this kind of fast because I got a lot of seasoned traders here. You're going to learn 3 powerful proven trades. And all my modules are online. You can learn at your own pace. And you got to have internet access. I cover each of these 3 trades in depth. I just showed you how important opening price is. Very, very important. You can actually trade the opening price trade all day long. Watch and look at your charts and look how well opening price is respected all day long. And why opening price is so critical and how you can take advantage of it throughout the day. I want to show you how to avoid getting fooled. Now, I just showed you one way of not getting fooled on that opening price trade. The second attempt entry, it's going to save your bacon. Don't get in there the first time. And I'm going to show you a strategy to make trades both long and both short to make money. I showed you a little bit about the 15-minute reversal. Okay, I think you're going to look at charts just a little bit differently yesterday. Because 15 to 18 minutes in the trading day, guess what? It will probably reverse. And there's a right way to enter it, and there's a wrong way to enter it where you'll get whipped out, chopped up, spit up, and chewed up all day long. So I'm going to show you how to bracket it properly, how to get into it properly. And so, sometimes price just continues. It's what it does. And to enter the trade and minimize any wash and rinse. Do you mark previous closing price? The Globex close I care about, Steve. Now, 10 a.m. Eastern Standard Time. Great time to make money. But most people trade news incorrectly. I'm going to show you how to do it the right way. Because once you think is up is down, and what's down is up, and it moves crazy. Well, I'll show you how to do that properly and make money with it. Now, keep in mind, I gave you a huge secret today, volume spikes. Volume spikes are so important. I don't have much on my chart, but I do have volume. Funny thing, isn't it? So I'm going to show you what best sources of news are and how to maximize your advantages for both good and bad. And how to set up your profit targets. Guys, it's all about one thing. It's all about managing risk, and I'll make sure we set up your targets and stops properly for what I do. What's rule number one about trading? Well, it's the same thing with real estate. What's the most important thing about real estate? Location, location, location. What's the most important thing about trading? Protect your capital. Risk, risk, risk. It's the same thing. And that's why I show you how to use my automated stops, targets, everything to make sure that you're trading things properly. I go back to the way I was trading in 99 and 2000. Guys, we didn't have stops. We had mental stops. And we had mental targets. Can you believe we traded that way back then? I couldn't even dream about trading that way now. You've got to have heart. You got to have your stops in, your targets, everything out there. Because what do you do all day, ladies and gentlemen? You manage risk. Risk is the most important thing. And that's what I like about Cyber Trading University is I think they drill that in also. Risk, risk, risk. So if you want more information, go to investwithsuccess.com/1KW. And I'm going to give you 3 extra bonuses if you sign up today. I'm going to give you my indicator. My indicator will mark these trades for you. It will mark the support and resistance, everything you need. And it allows you to focus on the trades, not the setups. And you have less chance of missing the trade because the indicator will show you where the trade is supposed to be, which is a $497 value. Also, I'm going to give you a psychology course. Trading is 80% psychology, 20% mechanics. Psychology is so important to help predetermine your level of success, minimize emotional trading, and focus on mechanics, successful money management strategies, and setting your daily routines to keep you in the zone. It's a $375 value. Bonus 3 with volume. Oh gosh, I think I showed you a huge thing today with volume spikes. Now, a lot of you know that, but you know how to trade it. So I'm going to get into volume, how volume interacts between buyers and sellers, and predict the patterns of the market throughout the day. A $199 value. So you're probably wondering, how much is this going to cost? Well, guess what? I'm sure you've seen a lot of stuff out there. Add it up, it's a $2,000 value. I'm giving you my indicator. I'm giving you a psychology course and a course on volume. A lot of people out there will about 10 grand for this kind of information. Now, I'm not going to do that. I'm not going to charge you $995, and I'm not going to charge you $2,071 or even $1,000. I'm going to make this real easy, real stupid easy. For a limited time, you get the whole system, everything, for $97. Real inexpensive. Go to investtosuccess.com/1KW. We also have our 99% money back action guarantee. Sign up today. Check out the entire course for yourself. Just take at least one trade a week over the next 3 months. Just show us you took some action. Guess what? We'll give you your money back. Just try it out. But just take some action. So now you don't have any excuses because I'm taking all the risk. So here are two great reasons you want to sign up. One is this price won't be at the same price forever, and we do change the price of this. Second is a fast action bonus for the first 33 people. We're going to give them access to my trading room, and my trading room lasts about 35 minutes. That's it. I'm not there for 5 hours, 8 hours. That's just not me. That's not what I do. So we start at 8:50 in the morning, go to about 9:35 a.m. Eastern Standard Time. We'll have 2 trades, maybe 3 trades in that time frame. I take the trades, I debrief you on the trades, I answer all my questions at that time. And that's where I handle all my education. So you can see the system in action, you get all your questions answered, no strings attached, no auto renewal charges, hidden fees, nothing. And starts Monday of next week. So again, this is not a gimmick. We do change the price on this thing, so you probably want to take action today. And here's what my students say about what I do. Fran, it says, I love the time trading room. You really are showing what prices, you practice what you preach, and it's a massive plus. Guys, I show my trades out there. And let me give you a quick example of how I define show your trades. So I'm going to just make sure I'm in sim, because I don't want to be trading live right now. But if I show you guys a trade, this is how I do it. If I'm in a trade, it will look like this. And the market's closed right now. Great. So when I'm in a trade, you will see my entry, you will see my stop, and you will see my target. You will see all of that. I am very transparent. So check out the 1K a week course at investtosuccess.com/1KW. So if you don't take action now, how will things be different from you at this point? So investtosuccess.com/1KW. And you've got to all sit around here. Peter, the answer is 0. If you've got a $20,000 trading account, when you start trading, you want to be in simulation. You want to be in trading. If you got a $20,000 account, get good first in simulation. And actually, I would. And again, I don't know what where you're at with everything, but I would trade with a prop firm's money first too. A $20,000 trading account is a good size account. You can do a lot with that. But first start out in simulation, get good in simulation, get good at market replay, get really good at your craft. And then from there, my personal belief is when you start trading live, you got to trade 2 contracts. You can't trade 1 because it's all about risk reward ratio. And if you're risking 1-to-1, you got to be winning 78% of the time. It's that second contract that makes you multiples of your money and completely changes your risk profile so that you're making 4 times, 3 times what your normal money is. So that's how I would see it. And again, I can't tell you how to trade your own personal money or what your, you got to talk to your broker about that. But I'm in simulation, then trading with a prop firm. Once you're successful trading your system with the way you're trading, then I recommend trading your own personal money, because then you fix most of the psychological problems, and you're good. You're good at what you do. So that's how I would proceed. But I just hate to see new traders without the experience trading something that they don't have experience trading. And like anything else, I want to see you do 50 to 60 trades before you do that. Why do you teach if you make lots of money? I'll tell you why I teach. Because I've learned over the time that when I can put into words and I can describe what I do, I become a better trader myself. So and I only have a 30-minute trading room. So when you teach people what you know, you become better at what you do. Because people who can't auditorily and describe what they do, they really don't know what they're doing. So that's one of the biggest reasons why I do it. And I think you'll find that should be true when you teach someone else. So, well, very good. Any last questions? I appreciate you guys having me back from Cyber Trading University. And, you know, we partner with firms that are the real deal, and that's why we like partnering with Cyber Trader University, because I haven't had the pleasure of meeting Fausto. I don't think so, but you know, he's a great trader. He does very, very well, and we like systems that work, so, and not just smoke and mirrors. So take some time tonight and look at opening price, mark it on your chart, and see how important it is. Andrew, is this the Andrew in my room once in a while? I think so. 1K a week has 2 different trades. It has 2 trades that are not in my time trader course. But plenty of trades in the time trader course you can be taken, especially on bonds, especially on the gold open and all that too. So good to see you here. All right, well, I'm at my time. Thanks for coming out today. And Josh, thanks for having us out. Take care. God bless, and have a great day.